Welcome everybody to the SNN Network Summer Virtual Event 2021. I'm your host, Robert Kraft, and thank you all for joining us today. I'm really pleased and excited to introduce our first keynote of the day, kicking us off, the headline act, as they say. And look, we were just joking offline for like the last 20 minutes. I don't know how serious we're gonna get today. I don't know. We're gonna make investing fun again. Maybe that might be a goal of ours today. But with that, I'd like to introduce my guest today. It's Guy Spier. He is the managing partner and principal at Aquamarine Capital and the author of The Education of a Value Investor. Guy, good to see you again. How you doing?
Robert, it's great to be here, and everyone. In the time that Robert and I were spending, I've discovered that our host has an extraordinary sense of humor, which we are only just beginning to explore, and maybe later we'll get into it. But if we get into it right away, Robert, we might not be taken as seriously as we'd like to. So we're going to try and get the balance between serious and fun here.
Should we shed a light on some? No, we won't. We got it's technically 8 a.m. Eastern time when people are watching this, so I guess we got to keep it somewhat PG to start. Maybe as we get into the second half hour of our chat, because we just kept going. We'll maybe we'll go after dark stuff.
Exactly.
maybe we'll get some takeaway home stuff first before we really go off the rails.
Exactly. Well, it's a dangerous road to go down, but I'll go down it with you whenever you decide to lead me. We'll see how well I do. But
we'll save it for our I was gonna say we'll save it for our Clubhouse. I remember when we did our first podcast chat, we were talking Clubhouse right at the beginning. I think Twitter Spaces clearly won that battle. I don't know about you, but have you been back on Clubhouse since we published that?
I have not been back on Clubhouse much, and it's sort of surprising to me because I was so enthusiastic about Clubhouse. I thought it was great, and I have done a couple of Twitter Spaces, and those were also great. But I think that I turned off notifications on my phone because many of the hardcore groups were kind of, I don't know, they just didn't groove with my kind of vibe. And, ad-libbing is fun, but also I think that when I have the time, I'd rather tune into a podcast, actually. So I have not been back on. I don't know how the platform's doing. It was kind of, for me, it was kind of a flash in the pan. I mean, I haven't deleted the app from my phone, but I've turned off notifications, so I don't see what's going on there.
Yeah, I did the same thing. I like the Twitter Spaces thing because I tend to be on Twitter mostly anyway. So like if somebody who I really like or just interested in hearing, it's just, I'm already on Twitter. Like might as well turn it on, see what they got to say. And even if it's for 10 minutes, I don't feel this like overwhelming sense of, if I leave, it's that big a deal. Like you Clubhouse, it's like I left the app. With Twitter, I can stay on.
And it's really hard because you get into a conversation. The next thing I knew, I was on a stage. And you just can't leave, exactly that. And my wife's getting annoyed at me because she's just seeing me talk, and she's saying it's breakfast or it's dinner. I'm like, but it's
amazing. You realize too, you're like, okay, like you're an extremely humble person, but at the same time, you have some kind of following as well. So it's like you show up in a Clubhouse group or a Twitter space, it's like, all right, they're gonna want me to say something. Like,
yeah, and right? That is also hard because you just want to often, or sometimes at least, you just want to hang out at the back of the room and not be asked. And so I don't know where it goes. I noticed that there's a friend that I made in Clubhouse called William Andreasian, who's a really, really bright guy. And I think that he's continued with Clubhouse, and he's developed an extraordinary following on Clubhouse. So I don't know where it goes, but that's the nature of early stage businesses. I mean, if you think of, I know that it was when I was skiing, so it must have been around February, March. Imagine being a VC in Clubhouse then. You just think you think you're on the way to unicorndom. And I don't know. I mean, I would imagine that user numbers have tapered a lot, given your and my experience. Doesn't feel so good anymore. And, you don't know until 5 years in or maybe longer whether this thing has a real competitive moat or not. Meanwhile, you're just doing the best you can. And you can invest 5 or 10 years of your life into something and then it just doesn't work out. Tough, you know?
Yeah, I hear that. All right. Well, we'll start there, but I wanted to get to our main topic of the day. And it's been, listen, I don't know if this is just a symptom of it being the dog days of summer where everyone kind of wants to check out. But at the same time, it feels like in these last 18 to 20 months, and this is really just, at least for me, you're following the news and COVID stuff so closely. And then, of course, ever since March 2020, you're also trying to understand how this will affect market outputs.
Yeah.
So I mean, I don't know if it's August 2021, everyone's sick of it, everyone's just to go out again, but are you feeling just a general sense of, finance and investing fatigue, or is it, or am I totally off? I feel like I'm a little tired. I'm not going to lie.
So let me begin answering that with a question. How long have you been in the investing world, Robert?
Since 2011.
Well, yeah, that's a decade. But so I've been in the investing world for more than 2 decades, and I think that there are certainly points in which I've kind of felt burnout, and those were points at which I realized that I had to change my approach to what I was doing, because burnout is not good. And I'm being presumptuous, but my sense is that what may be happening with you is a kind of a mild, believe me, everyone, Robert's full of energy. So if it was burnout, it would be mild. He's not, you can see he's looking well, you're looking suntanned, you got a ring on your finger. So obviously somebody loves you, so it's not, but that sense of malaise may just be because you've been paying too much attention in recent history. And if you plan on doing this for the rest of your life, you got to kind of pace yourself, if you like. And there's all these signals that say sprint, but you got to pace yourself in. But I think you're probably right that there's an element of it, which is it's been an extraordinary bull market, and who knows when the hell that comes to an end, but we know that it will eventually come to an end. And what I'm sensing, it actually is another signal for me, the fact that you're feeling kind of burnout, if you like. And eventually all those day traders and all those Robinhood traders and all the people trading crypto, at some point they'll go to burnout as well. And when enough people get to burnout, that may be the time when things start going south.
It's interesting. It's not so much the I feel burnout, so to speak, and I don't invest actively, because I run the media company and doing that. And it's not so much that, it's more of a feeling of because things move so quickly. It's the fatigue of like, oh, I missed this. I may have missed that topic.
Yeah.
Maybe, and it could have been something that's a really important topic that affects other things having to do with microcaps or small, so it's more from that of like, oh man, I missed that. And then always having to, of course, remind myself like, all right, information moves a million miles a minute, where we are right now, so I always know that there's another bus that's always going to come in that'll be interesting, and there'll be something to talk about there. But it's more of that, because there's just been so much news coverage, so much everything.
Yeah, but it has accelerated as well, and the ability to create news has democratized. So we can all create news, we can all tweet, we can all blog. There are 1,000 different ways we can reach audiences. And there are so many. I mean, if I just think of some of the publications that I'm subscribed to, just to try and keep track or try and attempt to learn about some of the new businesses that are developing. Like there's something called Stratechery by a guy called Ben Thompson, or there's something called The Information.
Love that blog.
Great blog. So there's it used to be that I just had to tune into my Bloomberg or into Wall Street Journal. And, I realized 3 or 4 years ago that places like the Bloomberg Terminal and the Wall Street Journal and others just weren't covering some of this stuff. So and then, a few days ago, I had a call with about 8 friends on the elevator business. And, about a month or 2 before that, I had a call with a different group of friends with a guy called Muji Hypergrowth, who's like into all these cloud businesses. And so the number of places, a lot of news being created, a lot of analysis and insight being created, a lot of places to consume from. and over and above that, the world is indeed changing really, really rapidly. I mean, what is it? Within this decade, China will be a larger economy than the United States. I don't think most people, even the smart people, have figured out what to do about that. And so things are moving way, way faster. I think that the antidote to that from and I don't think that I'm necessarily the best exemplar of it, is the people who just they're already used to tuning lots of noise out, and they're just focused on the things that aren't changing much. And there's a guy. I don't think I'm sort of like doing anything bad by mentioning his name. His name is Greg Alexander. He works at Ruane Cunniff, and the story I know about him of 9/11 is that they meet in the sort of like the company's Ruane Cunniff. That's the name of the company at the time. They meet in the coffee room to discuss, and there's a TV there, I think, and they're like, everybody's bombed out. I mean, 2 planes have just hit the twin towers, and he just goes back to his office and starts reading annual reports again. That's a very particular personality, but I think that I don't know if I was talking to you about this guy, David Perel. I was listening to one of his videos this morning, and one of the things that he does on his Twitter feed is that he never reacts to or responds to the ephemeral. He's always trying to write long form essays. He's always only sharing ideas that will stand the test of time, that will survive, that will last. If you look at them on his Twitter feed in 3 years' time, they'll still be relevant. I think that maybe is one antidote to this sense of, I still, I know that you didn't like the word burnout, but I'd still call it a kind of a burnout.
I didn't say I didn't like it.
I look at, I have various places where I track companies that I've come across that I want to stay around. And I'm just amazed at how many of them are up by more than 100%. So if I list them for like what, where they are from their 52-week lows, so many of them are up 100%, 200%, 300%. I mean, that is not a normal year or a normal period in the stock market. And, so it is a strange period, no question about it. But every period feels strange when you're living through it. And in retrospect, somebody will come 5 or 10 years, oh, that was easy at the time. Now it's really hard, So.
Yeah, no, I mean, look, I've been doing this for a decade, and I remember a few of those times where I remember first coming in 2011 and looking at the mining industry, and everything. That was when all these precious metals hit their all-time highs, and I remember thinking back to that time, like, this is such a weird time, like, metals at all-time highs, and then you're seeing more of the value growth names kind of going through kind of a malaise, from what I remember. And then to now with what we're experiencing, it's just trying to make sense of some of this stuff. That's where I feel like I'm like burning out my brain. I think truly that's what it is. Listen, I come to you to have our therapy sessions. Okay, this is financial therapy for those who okay.
Yeah.
So maybe that's what it is. It's just like, what is going on? And it's like, all right, I'm just too tired to think about this.
Well, I think that, and we have the whole, it would have been hard anyway without without COVID. And I think that where I've gotten to with COVID, I mean, I remember in April of last year saying, yeah, this thing will be over within 2 or 3 weeks, or max 2 or 3 months. And I think it must be about November or no, well, yes, then I went through maybe a 6 months period where I kind of was still trying to, feeling like I could be smart about the course of this event. And, then the vaccines came, and I thought, okay, we're done. And the realization in around February of this year, February, March, that in spite of the vaccines being here, we are not done. And we may not be done for another 12 to 18 or 24 or 36 months. And on the COVID front, I have given up trying to predict what will happen next. What I've also gone and done, though, is that I'm not going to change my behavior I'm not going to change. I mean, I'm wearing a mask indoors, but I'm not going to try and plan, decide whether I'm going to travel or not around changing rules. So here in Europe, they seem to change every other day. So, you know, I dropped my daughter off at the airport yesterday, and the airport was jam-packed full of people. They must have lifted a restriction somewhere, and half of Switzerland was flying out at the time. So I think that what I got to with investing was already a long time ago, where I feel, you know, we'll see when the tide goes out, you find out who's swimming naked. But I feel that it happened for me a long time ago, that the businesses that I own, I don't think have been bid up to extreme levels. And I think that when some of these multiple bubbles that are floating around come down, I think that it might even be a positive. I mean, what I experienced in 1999 was that I saw a bottom tick on Berkshire Hathaway and a top tick on the NASDAQ, which were within days or weeks of each other. And people sort of thought Berkshire Hathaway was going to the ground and the NASDAQ was going to the moon. And of course, the opposite happened. The following year was a bumper year for me, not so much for the people who were heavily invested in NASDAQ stocks. So, but, you know, if you look at, I mean, the people that I'd urge you to kind of go and emulate are, you know, there's this guy, I don't know, it was multiple different family members, but Khan, one of them was 109 years old and still investing. And obviously Warren and Charlie are way up there, but you get to that age as a value investor, and so many value investors live to such old ages. They do that because they've kind of managed to figure out a kind of equanimity in the face of all the noise, basically. So I don't know if that's helpful, Robert.
Yeah, no, it definitely is.
If it's not, I could just take my shirt off, but.
Well, then we figure out if you are that swimmer swimming naked, you know, when the tide does go out.
Exactly.
So another question.
Listener, that was a reference to the banter that Robert and I were having before we got onto this call, in which I was a little worried about my shirt, and I wondered if I should go and wear a proper shirt. And Robert said, "Hey, at least you got a shirt on." To which I responded that I could take my shirt off if he liked, but he might not like the consequences.
To which I said, I don't know, that might actually maybe be a bump in viewership.
Yeah.
Like, wow, Bobby got Guy to take his shirt off. That's kind of a
which
big
shows
deal.
how much Bobby appreciates Guy's words. You know, like, now I realize that all you really want me to do is join the wet t-shirt competition. But you know,
like I said,
at least we know why you really want me here, Robert.
Listen, like I said, we're trying to make investing fun again. You know what I mean?
You know, and you know, but and I would just tell you, Robert, that people used to ask me, "Hey, why did you move to Switzerland? Isn't it boring there?" And I turned to them and I said, "Yeah, it is totally boring. And by the way, boring is good. I like boring. I have enough interest in my life from 1,000 different things." And I would just tell you that for me, just me, I don't want investing to be fun unless long-term greedy is fun. But you know, I'm not looking for fun in the stock market. I'm just looking for long-term appreciation and entertainment. You know, give me a book to read, have a nice conversation, go to the movies, friends, you name it, go for a long bike ride, take photographs. I mean, but I actually love finding business. I mean, all of these cloud and new technology businesses are so sexy, but I think that, and exciting and interesting and quote fun. And you and I could listen to more than 24 hours a day of podcasts in which you have really smart people talking about how amazingly interesting these businesses are.
I love finance podcasts, but I don't know if I could do. I don't even think I could do that. But I know what you're saying.
Yeah, there's a guy in crypto who's just. I mean, these guys are all utterly brilliant, and but I get excited about non-tech companies or not apparently tech companies that do extraordinarily well. I mean, the one of the companies it pains me so much that I didn't figure it out and nobody I knew figured it out either, is Domino's Pizza. You know, imagine, Robert, what really excites me is finding a company like Domino's Pizza, which does damn pizza delivery, and just riding that for a decade. Or a company like Pool Corporation or Cintas Uniforms, that or these are companies that have just compounded year in, year out for the longest time. And you sit there in these really boring businesses, uniforms, and suddenly you realize you made 20 times your money. Or we were talking about it, I think, before we put this live, the elevator business. I mean, it's like and some people, I don't understand this business well. I mean, heating, HVAC, heating something, air conditioning, also kind of potentially really, really interesting businesses which are in consolidation with high returns on invested capital, and totally freaking boring, and just riding the trend of when buildings go vertical, when city centers go vertical, and you get more than like 5 stories in a building, you're gonna pick a different kind of HVAC contractor to do your HVAC, and it's specialized, so the normal construction company doesn't want to do it. And it's kind of like a concentrated market when you get into that realm. And how great is that? So that's boring. Boring is good, Robert. We don't need interesting. If I needed interesting, I'd still be living in Manhattan,
But if I may, you love the game though, right?
You may.
No, but do you love the game of investing, right?
Robert, it's an interesting question. A very, very interesting question. What is the motivation? So, I think that even in investing, even just in value investing, people are in it for different reasons, and even the people in it are playing different games. And so, some people, if you go down to a the right places, you'll see people who are playing the game of the guy who dies with the most toys wins, and those guys are buying yachts and fast cars. And so there are people also in the investing game who are playing the game of, they want to win in terms of number in the bank account, for example, or what their net worth is, or the total value of the assets that they manage. And they're super hyper competitive people, and that's not a game that I want to be playing. And I think that the game that I want to be playing is just growing goodwill, growing well-being on earth, if you like. And if I happen to become extraordinarily wealthy in the process, then that would be great. But it really is not my primary goal. To the extent and I can give examples of why I think that's smart for me, why it fits with my psychology. But so, do I enjoy the game? The game of staying in the business. So many people get kicked out of this game, or the meta game, the broader game, is I feel, I don't know if I should be saying this. My desk is wooden, so I'm touching it. Is a game that I've succeeded in staying in. You want to be out on the field for sure, but exactly what you're doing on the field, and I don't want to be trying to score goal after goal after goal after goal. I just want to be in a part of a great team, if you like, and passing the ball well. And I guess I'm using a soccer analogy there, and playing the game as a good team rather than trying to win as many goals as possible. So. And that's not everyone. And the reason why I kind of dive into it is that it's something that I've struggled with, because I do have friends who are trying to win the game in a more simple numbers game of who's got the most money under management, or who's done the best takeovers, or who's got the highest net worth. And what was happening to me, Robert, was I was saying, well, if the analogy with oxygen works really well for me. So we all need oxygen to breathe, no question. But wouldn't it be ridiculous to see a guy who has collected more than 500 times a lifetime supply of oxygen, and you go to his home and he just shows you all these oxygen tanks lying around and saying, "Isn't this great?" And you'd be like, "No, that's really rather ridiculous, because you'll never need all that oxygen. So why are you storing it, and why are you spending so much time thinking about it?" In a certain way, isn't that true of money? So money is useful. It helps you get things done. It's claims on society. But somebody who just revels in having an enormous amount of it, it's a little ridiculous, actually, because it's like more than they can ever spend in their lifetime. So, and there are some people, Robert, in the finance game, and that's what they're playing. They're still trying to get as rich as they possibly can. And I think that, you know, what I would want to do with them if I was in a psychotherapy, if I was their psychotherapist, which would never happen, but if it, you know, some imaginary world, is I'd say, look, you got to split this down into enjoying that you do something really, really well. And that is something that is worth doing because it gives you a sense of satisfaction, but stop worrying about the dollar amount or the money amount. And by the way, if you're doing that really, really well and you're not making the world more beautiful at the same time, then that's also not great. And you know, you get to decide how to make the world beautiful. Some people paint art, some people do gardens, some people build Berkshire Hathaway, some people, you know, write books. There are different ways of doing it, but find a way to make the world beautiful. You know, that's in a certain way the ultimate game, if you like. Managing money is not the ultimate game at the end of the day.
But because the reason I actually really even asked you that question,
I'm getting to know Rob a little bit. So he's like, yeah. But
okay. Well, no, I loved everything you just said there because I agree very much. Like I'm very much in that camp that I want to, you know, do our best to try and make the world beautiful. But in doing that,
yeah,
you have to have a little fun doing it, right? Like if like playing the investing game, you know, you don't just. I'm getting to know you a little bit better, and I would imagine you don't seem like the type of person where it's
you're
like
getting to know me better, but. Sorry, like, Robert, I'm going to make you pause. You're getting to know me better, but I ain't taking my shirt off just yet. I just want you to know that. Not that you should be picking out curtains or anything. Sorry, go on with your question. I want everybody to know. I want everybody to know that Robert gave me permission to sip my tea. It's very good tea.
I did. I'm not quite sure if it is tea. I think there might be some bourbon in there.
It's definitely tea. I promise you.
Tea. Okay, all right.
You want to see the tea bag? This is the tea bag.
Okay, all right. You know, one thing I also learned from our last podcast, or first podcast, is that Guy is the most transparent person I know. So if I call him out and maybe say there might be brains, like no. There's
I'm transparent, but
I will show you that.
Take the t-shirt off. I just want you to know that. Your question.
My question is, you know, in getting to know you a little bit better, how you say like, you know, I can save the entertainment and fun for going out to the movies, going on a bike ride, and then you know, and then I have my investing and my work. You must have a little fun doing it, though. I would assume that there has to be some fun there.
So what are the moments of kind of like success and reward for me might be another way to put it. So, and I want to draw an analogy where I'm sitting not so far away from a Montessori school where our children attended, and it was privately run and technically for profit, run by a mother, is still run by a father and mother pair who but their goal was not to make the most money. Their goal was to do Montessori right. And they had a very, very strong idea of what good Montessori was. And they were totally dedicated to pursuing that. And for them, the school would be successful if they could create it in the image of what that should look like. So what gives me that sense of achievement is, well, you know, there's no question that if I've laid my bets right and they play out well, then that is a wonderful thing. I'll tell you, you know, actually I can't because we're trading it. Sorry, Robert. I'll tell you in about 3 weeks' time when we're done. But something that I bought in an emerging market 10 years ago, that, you know, because God's watching me, immediately after I bought it, it went down by like 80%. You know, and this is like a hairy, scary emerging market. With this is not like, well, I'll just tell you, it's in the Middle East and it's not Israel, put it that way. And then suddenly the thing in the last 20 months more than doubled, which meant that we earned more than doubled on the original purchase price. Turns out we didn't make such a terrible return on it. And so that this kind of like saved, well, that feels good that the decision worked out for me. And I guess that is true. There's an extraordinary rush and sense of satisfaction and in a certain way achievement when those things go in your direction. But I also get a strong sense I mean, it felt good to me that I was in London. I wanted to get back to Zurich. There was a stupid quarantine rule on. And the only way that I could get back and not have to spend 10 days in quarantine would have been either to go and spend like 14 days in France waiting to get into Switzerland, which wouldn't have been great, or to go via France. And then rather than take a flight in, to kind of just take a train or rent a car and not say that I'd actually just arrived in France and I'd arrived from a country that was under quarantine rules. So, and I have gotten to the point where the only people who would have known would have been my staff. And it felt really good to me that I made the choice not to do that, because it was kind of like me learning to play not just more or less by the rules, but to be able to play 100% by the rules. And even with rules that I think are annoying and I disagree with and are not achieving the results that they want to achieve. And I don't got COVID anyway, and I was vaccinated and I'm happy to get another vaccination, all those things. So that's a kind of a different kind of winning, if you like. And so you got to, and I think that those kinds of wins, or when people write to me and they say that they love my book, or when I have a really good due diligence conversation with somebody and I've responded to them in a really positive way, in a certain way, those are even better wins than getting the investment results, if you like. So, but yeah, at the end of the day, when you have nice returns, or if a company is doing well, it's a wonderful thrill. But it's dangerous. The reason why I'm kind of shying away from it is that you want to set yourself intermediate goals that you can actually impact. And the problem with, buying something, waiting 5 years and it goes up 10 times is that, yeah, you laid your bets well, if you like, but it's not something that you can impact. Whereas sending people home every day, feeling good about the place they work at, that's something that I can impact. And I think it's really fun to play those to target those intermediate things in the knowledge that if you do those well, really good results will follow from it. And so that is more satisfying and long-term will deliver consistently better results, if you like. And I promise you that Charlie Munger's got such an amazing reputation today. He would have spent a good 10, 20 years doing things that improved his reputation, getting no adulation or reward from it, just doing it because he knew it's not so much that he was just wearing a hair shirt. He was happy to wear the hair shirt because he knew that it would get him to the places where he wanted to get to. And so that's a different kind of satisfaction, and it's kind of like it's a game in itself, and looking for other people who are playing that kind of game. I mean, there's a company called Daily Journal, and that's Charlie Munger's he owns quite a bit of shares and he's the chairman. And then there's a subsidiary called Journal Technologies, and Journal Technologies sells software as service to municipalities, primarily criminal courts these days, but could be other places in the future. And there's many other enterprise software companies will bill you a consulting fee until you go live with their software. And Journal Technologies just says, no, we'll carry all of those costs because we want to set up with clients in such a way that at the point where we go live, they haven't paid us a dime. And that's kind of like feels good. And it's a huge hit to the bottom line, at least in the short term, but it's long-term greedy, So this is stuff that will pay off 5, 10, 15, 20 years in the future. So I don't know. Am I making any sense to you, Robert, or do you just want me to take my shirt off?
What's with the? I didn't even say this. You were the one that suggested that at the beginning when we were offline. I no longer endorse it. But actually, what I wanted to do, and by the way, it all makes a lot of sense. And I think you answered my question, even not even so much directly in the sense that in just showing how much you do, not just your due diligence and yeah, you were saying?
No, yeah, I want to tell the viewer that I believe that if you do the slow motion replay, there were certain points at which, so I was making a very meandering point, and there were certain points during the time that I was making that you will see Robert's eyes were drooping. So, but maybe not. Who knows? Maybe not. Maybe that's just me.
I was looking down at the Twitter questions that were sent in that I think there's actually there's some good ones that I think we should get to. Yeah, you ready to? I think you saw a few of them. You were tagging it.
No, I'm not. I try not to check my Twitter feed more than 1,000 times a day. I just want you to know that.
Fair enough. Well, here's
putting it up now. No problem. Go ahead, blast away with the.
Well, the first question it's asking about It's asking about one name in particular. So I didn't do the background research, so I don't know whether or not you own it or not, or actually had an opinion on it. So I'll let you look at that one first. So I'm going to ask this other question before that one.
So this is Thrive, THRY.
Yes.
So a friend of mine who, he used to work for me. He's the head of research at a company called CJS Securities, and he emailed me that idea about 2 months ago. And today I opened that email and downloaded the research report. And so I don't know if Jeff Moore is connected to this guy or not, but I just wonder if he saw that I downloaded the email. The company's called Thrive, and they have a declining business and a growing business. And that's all I know about the company. I haven't really dived into it. And so I've thrown it into my to look at list. So.
All right. So, and for a timestamp on the day he downloaded it, it was, we're recording this on August 2nd. So we'll make sure we have that.
That's right. Yeah. This is going out August 17th.
That's right.
Now that we've mentioned it, it'll have gone up, But now that we've mentioned it and I haven't bought it, it will have doubled by the time this thing goes out. and just that, but if I do buy it, which I haven't, then the thing will go down because God is, I said this somewhere else. The stock doesn't know that you own it. There's a famous phrase amongst brokers, but God does know that I own it or don't own it. And it's just like, if I own it, it'll go down. But if I don't own it, the price will go up. So I don't own it. So it's probably a good idea to buy it. There you go.
This is actually an interesting question. And this ties into one of the other keynotes that we're going to be showcasing later today about the destruction of value for shareholders in China. And at Martian of Safety wants to know your take on investing in China. Do you have a take?
It's really hard, isn't it? Because China's different, and I always knew that China was different. And just forgive me if this is already obvious to you, but China doesn't have checks and balances. Somebody wrote that. And so what the Communist Party of China says is law, pretty much. And so at the same time, there are these huge and burgeoning businesses in China, and this is not because I know it, it's because people whose opinion I respect tell me that it's the case, that these are extraordinarily well-managed businesses, and they've really nailed technology in the ways that US companies have not even started to be able to do. And so what do you do if you're a global investor? And I think that, so I don't know the answer to the question that the reader or the Twitter user asks. I think that one simple answer is position sizing. So because, somebody said it really well, we project into an emerging market or in a non-home market all the knowledge that we have about our home market, and we don't realize that our mind is just filling in blanks left, right, and center, and it's just painting a picture that is not the reality of the local market, and then these things come and bite you in the ass. I think that the other thing that I would say is that And again, this is not based on first-hand knowledge, but companies like Alibaba and Tencent and potentially even Huawei and others are multinationals. They're Chinese multinationals, but they're multinationals with a very, very global view of the world, not dissimilar to McDonald's or Coca-Cola. And so I have a question as to whether when one invests in those companies, at least the management are thinking in a very global way, potentially far more global than US companies. And they're thinking about, you know, their investments in Africa and in Latin America and in non-China Far East. And they're interesting people to follow and get to know and to understand. The last thing that I would say is that the pendulum swings, and it's been hard for me, and I think for many of us, we just assume that the Western way, division of power, parliament, legislature, judiciary, checks and balances, that whole system is the only way to run a modern economy. But that is clearly not the case, because China is succeeded enormously without liberalizing their politics. And anyway, which way you want to look at it, and I know there's bad things going on in with the Uyghurs, and I don't like what's happened in Hong Kong, but at the end of the day, millions of people travel out of China every year, and they travel back to China. And if China was such a terrible place, they wouldn't be traveling back to China. And so I think that what I have to do is I have to hold off on my sort of Western judgments on how a country ought to be run, and recognize that the guys running China are highly, highly intelligent people, and they want the best for China. And to get the best for China means that you need to get the best for the world, because China is so heavily involved in the planet now. And so it's just not going to work for China to just go and rip off a bunch of investors, end of story. So I think that, you know, I have an open mind as to how China will evolve, while I also try and keep my position size such that things that bite me in the ass are going to totally kill me. And then I just give one last point, which I think is just really important, is that so companies like New Oriental Education and others were in the tutoring business, and a simple way of describing their business is, and they're in the business of value extraction, not value creation. So they weren't creating new seats, new university seats, new college seats. They were just helping rich kids jump the line. And I think that you know, the Western way, first of all, the Western way, unfortunately, might have been that these companies had gotten so powerful and their lobby so great that it would have been very hard to change the regulations on them. But even if you could, what you'd be looking to do is to bring those regulations in such a way that they have time to adjust and time to adapt their business models. So it's upsetting to see the Chinese doing that. And I think that they're learning how much power they have and how they perhaps don't want to do something like that again. And then the protection from my side, and it's not going to be a 100% protection, but you always want to, it's a checklist question for me now, actually. Is the company in the business of value creation, or is it in the business of value extraction? To the extent that the company is just extracting values, extracting money without delivering value, and there are all sorts of businesses that find a way to sort of like they're kind of toll booths in one way or another. Now, a toll booth, you know, let's say a bridge across a large expanse of water is a kind of a toll booth. But if the bridge company that owns the bridge is constantly trying to optimize traffic, they're investing in widening the bridge, they're investing in the communities either side of the bridge. So just because you run a toll booth doesn't mean that in and of itself is bad. But you kind of want to stay away from companies that are not clearly working to make the civilization better in one form or another. And it can be in ways that you don't like, but they should be working, because if you don't, then you may have some nasty regulations that come and reset the playing field. I mean, the most obvious one in the US was the tobacco companies, but there may be others. It's a long answer to a great question. And, long answers mean that I don't really know the answer, but it's fun to opine.
I mean, it was a question on your take, right? It wasn't looking for your, a right or wrong thing there. I think China's been in the news quite a bit recently, right? With taking certain IPOs off, or saying you can't list on the NYSE or NASDAQ anymore because of, I think it was the DD fiasco, where they were worried about. I just learned about this when I did the keynote recording with Perth Toll, and she was telling me about, like, this is kind of what happened. So it's pretty interesting to see what's going on, because in microcap land, I mean, China has been an interesting area, I'd say, to say the least. And I think that's probably.
And I haven't done anything in microcap land in China, that's for sure.
Yeah. All right, here's another good question on from Twitter, and this may or may not be our last question depending on our time. But it's from @DC19195. So, Guy, would you rather buy a watch for $2,000 that'll last you for 100 years, or a watch for $8 that'll last 1 to 3 years, and buy a new one when it breaks? Analogous to investing.
So, in response to a similar kind of question I asked of a boating fanatic, so I asked him the question, should I get the fiberglass boat that is less expensive and far easier to maintain, or should I get the beautiful wooden boat? And he looks at me, Robert, and he says, well, you could do both. So my question is, but so the assumption that the questioner is making is that you have a limited budget. And so obviously you've got to make assumptions about budget. And you're also making assumptions about technological change, if there is any or not. And you're making assumptions of what purpose the watch is serving. And so if the analogy to investing is not great, because obviously, if you're doing the watch for 3 years, then you're going to be paying taxes at the end of it. And if you got the sort of like really expensive one that you can own for a very long time, you're hopefully not paying taxes on it as you go along. So, I think that, and obviously, where you come out on all those assumptions is going to determine which one's better. And but I would just. A piece of research that I read recently talked about a term that I don't know if it was coined by Nassim Taleb, but he uses it a lot, the Lindy effect. And what he argues is that the best predictor of whether something will be around for a long time is whether it's already been around for a long time. And so, if you want to figure out which books are going to stand the test of time, find out how old they are already, how long they've been in print. So best prediction is that, if you ask me to bet which book will be around in 1,000 years, I'd bet the Bible. It's already been around for 2,000 years. Which books that were published recently will still be around? And so, just philosophically, I'd rather go for the $2,000. I mean, extremely well made. I hope it's well made, because that's something of value, whereas the other one's kind of depreciating. But the analogy is a tough one to work through, because there's so many assumptions one needs to make. And so I guess in a broader sense, the answer to the question is, it depends. And it depends on some really important things that one has to look at in granular detail in order to figure out which is the right one, and don't just assume that one is right and the other isn't. And they're both arrows in your quiver. In one case you might use the one, in another case you might use the other.
Absolutely. All right. Well, with that, we are pretty much on time here. So do we take our shirts off now? Is this now shirts off time? But
we've done so well, and I actually like looking at your jeans shirt. So why don't we just leave it as is? I think
I'll make sure to keep this one on today. But to close us out here, bringing it back home on the original topic, talking about investing blockage and maybe some fatigue. What are some things that you've done in the past where maybe you felt that helped you avoid, you know, feeling like you're burnt out on certain things? Is it as simple as just going out for a bike ride or going to see a movie, or are there other things that you can do that can kind of get you going?
You know, there was a I don't know, you know, one of these kind of New Yorker cartoons in the books that I used to read about investing in the 1990s, where the best advice was sell in May and go away. So as you said earlier on, we're in the dog days of summer, so maybe the thing to do is to sell in May and go away. I think that if your default position on your portfolio is do nothing, and you have the right portfolio, then you are always free to take some time away from the portfolio. And I certainly experienced that. I work in spurts, and so yeah, I think that, like, you know, I just had I had a pretty intense time with one of my children here at home, and I used the bike ride as a kind of a way to put a full stop between what had just been and what is about to happen. So I think that intense exercise for me helps a lot. I think that also, Robert, it's possible that for a lot of people it's travel, and travel forces certain breaks because you got to get on a plane, you're going to be in a different environment, and so many people have just not traveled, and that may be the part of what's contributing to the sense of malaise or sense of blockage, if you like. I mean, we ever, you know, all the books say, oh, if you want to get some new ideas, travel, and many of us did it instinctively and normally. And now, you know, something that's hard for me about these Zoom calls is that I'm chained to my desk, you know. So you get these people who it's not just that they don't travel, but they're kind of just stuck in the same position, if you like, because I mean, I could do this into my iPhone, but the quality wouldn't be as good, and you're still kind of caught. So, you know, something that I have not done, but would be interesting to do, is a complete electronic detox. And, you know, the guy who wrote *Sapiens*, Yuval Harari, he goes away every year for a month, and he does Vipassana meditation for a month. And, you know, I succeeded for 3 days, and then I was done. So, but I think that, yeah, I'm glad, you know, many people laughed as well. I had some good reasons, but at the end of the day, I went on a 10-day Vipassana retreat, and I lasted 3 days. What I can tell you is that in those 3 days, I learned so much. They were extraordinarily valuable 3 days. I mean, I don't know what would have happened if I'd have lasted the whole 10 days, but, you know, just a reframing as well. If you plan on doing this for the next 30 years, you got to, you know, this is a marathon, not a sprint.
I think that's a great way to end it right there.
Yeah.
It's a marathon, not a sprint. So with that, where can our audience go and find more information to follow you and learn more about Aquamarine, and just give the full plugs?
Oh, that's very kind of you, Robert. So, you know, I do like Twitter, and my handle on Twitter is Spier. It's pretty simple to follow. I'm getting really disaffected with Facebook, and you know, I am present on LinkedIn, and you're welcome to. I accept all incoming requests. So long as you don't try and sell me something, in which case I instantly block you. You're welcome to find me on LinkedIn. You're also welcome to find me on Twitter. And I have 2 websites. I have a website for my fund, and I have a personal website, which I update from time to time. And obviously, I actually really enjoy the podcast that I have. And I just try to interview people that I'm curious to talk to. And every now and then because I want to keep a regularity to it, but I don't want to do all the interviews myself. A friend and colleague does some of the interviews. So I'm on a podcast, and the website's guyspier.com. So how'd I do?
You know what? We kept our shirts on. I'd say that's I think for everybody watching, we'll probably say then that's a win.
Because you know, Robert, if you don't want to go on a podcast or on an event that's about investing and have people say at the end, "Oh boy, they lost their shirts."
They lost their shirts. That's actually, I was thinking of making that the new title of it. Like, don't worry, they didn't lose their shirts on this one.
Yeah, in investing with fun and not losing your shirt or something. Yeah.
Or like, you're lucky you weren't blinded today because you have two translucent white boys with their shirts off. With that, guy, thank you so much for joining me today. This is a lot of fun, and I look forward to our next chat.
It was a real pleasure, and looking forward to meeting you sometime in either in Los Angeles or in Zurich.
Hopefully in Zurich. I prefer Zurich. If I know you want to travel, but I'm going to bring my wife to Zurich. I think we'd much rather.
Happy to see you here as well.
Thank you.